What's up everybody, Tom here with another video. Today we'll be talking about the latest stock market news and covering together our technical analysis levels for the S&P 500, Nasdaq, Volatility Index, Tesla, and Apple. The stock market continues to dive, but is this just a corrective pullback? Let's take a look together. Stay tuned. So as we always like to do on this channel, let's try and take the complicated out of the stock market and break it down together. One of the ways that we can do that is by looking at a stock market heat map, specifically looking at heat maps that show us the general sentiment of market rotation and the stocks that are particularly getting hit. Now, it'll come as no surprise that it's still the tech stocks that are generally moving the market. Yesterday, we did have a bit of a pullback in the banks, which was a surprise. And obviously, we had the bigger pullback in Microsoft, Apple, Google, Facebook, and Amazon, the extended companies over the last couple of weeks. When we move it to 1 week performance, I think it becomes more clear that it's really just a movement in the tech and in the growth stocks. Obviously, things that have gone up on vertical scales like PayPal, Nvidia, all of these types of stocks are going to get hurt the most. And many people would know that Tesla is obviously one of those. It's driving a lot of retail sentiment. And of course, Wall Street are really heavily bashing that stock, and they're doing it because they're taking those buy calls. We spoke about that last week during the beginning of the crash, and obviously we're talking about it now. Now, I will refrain from using crash and we'll use dip instead, because this is probably more of a dip, and there's several key indicators that we can look at together in this video that probably show us that it's more of a dip and a corrective phase than anything else. So clearly, it's all about tech, it's all about the Nasdaq, so let's have a quick talk about general sentiment overall. Well, one of the things that interests me yesterday is Nikola shares soared over 20% pre-market. They actually went up to about 43% to 49% during our live stream last night on YouTube. Now, the GM partnership is a big deal. It's also semi-negative towards, of course, Tesla. But what we saw yesterday was that Nikola remained incredibly bullish through the day. It had that initial dip, and then it remained pretty bullish, and it's one of those aggressive stocks that's traded a lot with sentiment. Now, we look at Tesla on the right-hand side over here. Does it make sense that it hit this 330 level? Well, I think it certainly does. It actually sold off more after market in futures trading. But as we said during the live stream, we saw that initial pickup followed by a pullback in the zone. So we look at something like a 4-hour, we'll actually notice that it picked up in the morning, which is often when retail traders trade the market, and then it sold off after that period. Now, we've hit this kind of 330, 320 zone, and this makes sense for Tesla to probably hold, or at least try to hold around this level. Why is this? Well, it's where we had previous market structure. It's where we had those previous highs, and we know that Tesla does trade very technically. It likes to come back down to zones, and we have those previous resistance body closes on the daily. So it makes sense that it stops here at the same time. Now, if it gets any lower than this point, where's the next stop for Tesla? Well, I think it's probably the 280 bracket where we had the previous support. So if it continues its blow-off phase, it continues this aggressive selling, we may be seeing it all the way down here. But let's talk about the general market overall and look at the main indicators that show us whether the market is healthy or whether the market is truly in some kind of really big corrective phase. One of the things we can do is we can look at the VIX, or the Volatility Index. Now, as we mentioned, the VIX did a very similar thing during the flash crash, and this was a flash crash in June. So we basically saw a very big aggressive kind of candle out of the gate with the initial spike in volatility. We've seen the same thing here. Then we saw it make a new high and then quickly reject off that volatility. We saw the same thing here. The next candle actually showed an equal high. So we actually reached the same point and then sold off, and then that was the end of that flash period. Now, interestingly, the VIX actually decreased last night. So the VIX did not continue even into the close. It actually decreased. And this shows us that all may not be what it seems. It may be just the standard kind of formation of what we see in growth. When a growth stock moves up like this, it always has a corrective phase. That's always the thing that happens. You can't have euphoria forever. So are we actually seeing some kind of deeper correction? Well, if we look at things like copper, which is one of the best indicators for corrective phases in the market, we are not necessarily seeing a very big negative here. Copper is trading at above the $3 range here. And we can see that during the previous crash, the actual crash happening from February into March, in fact, January 15th, when we really found out about this crisis, copper preempted the market. It preempted that initial sell when the market was actually making a new high. Are we seeing strong sell-off here on copper? I don't believe we are at this stage. But if we go down to something like a 4-hour, a few people might be yelling out, oh, that could be a double top. And it certainly could be. We could see copper fall further, come down, test this $2.95 area, break under that, come back, test it technically, and then we see the lightning bolt down. Now, if we see something like this occur, all of a sudden things change and it looks like we are in a deeper correction. At this stage though, while copper remains high, it's always known as Dr. Copper, and that's because out of recessions, out of really big problems in the economy, generally there's a huge amount of builds, and that puts demand on metals like copper and silver. So usually silver and copper do very, very well out of crisis periods. In this case, copper still remains relatively strong and we're not seeing negative kind of movement from it just yet. So I think that's a very positive sign for bulls out there in the market right now. What about US dollar index? What about what's happening to the dollar? Does that show us a sign of market sentiment? Well, as people are selling out of tech, they're putting their money into US dollars, it seems. Obviously, bonds are moving up, treasuries, etc. But the big thing here is that we have this big key 93.80 to 94 zone approaching on the US dollar. Now, the US dollar index, if you check it on a daily, is now actually closed above a 20 moving average. So if we have a 20 moving average on this on the daily, it's just closed above. And that's the first time it's closed above for a very long time. It's actually a very bullish kind of thing. We've also broken above the previous high over here. So we may see some weakness in dollar, then further strength in dollar. And I would expect it to hopefully test this 93.80 to 94 zone. Now, I never really say there's that many critical zones in the market, but because of the structure of what's been going on with dollar, where basically it's been accumulating at this phase, if it does break high, this is something that Wall Street and big traders will pay attention to. All of a sudden, we'll be going from being negative on the dollar to overall positive. So if it gets through this 94 zone, it's one of those key kind of phases where all of a sudden we're triggering 95 and 96 points, where the dollar will strengthen into those zones just because this key boxed area up here is a change in sentiment on US dollar overall. It's very important to know these kind of things, to look at the structure of the market, to understand it, and then move ahead once you see key breaks. You're not always going to know what's going on statistically, but when key levels break, it is very important. So let's put things in perspective. Well, what do our good friends at Goldman say? We've been following Goldman for a little while, and we do know that, of course, they get it wrong quite a lot. But we do have here a probably corrective phase, and even Goldman is saying 10% sell-off, and then potentially, of course, plenty of market room ahead. I still think there's a decent case for not too much pullback in the S&P 500. We'll take a look at that in just a minute, but 10% sell-off is certainly possible, and we've seen more than that, and of course a lot of those tech stocks that were overworked. SoftBank is also a concern for a lot of people. I think this is just part of the overall issue. We've got a lot of buy calls out there still expiring over the next couple of weeks, and I think a lot of this leads into Thursday, September 17th in Australia anyway. Go get your economic calendar out. This is a Forex Factory one, and we have an FOMC economic projection, statement, fund rate, and press conference all at this point. Now, this is probably the key for the market. We want to see what happens here, and potentially the stock market wants direction from the Fed as they're not getting it from Congress. I think that's the big thing. So could we see sell-off and further sell-off into Thursday, September 17th? It's certainly possible. That's probably what a lot of people are kind of pointing to right now. So let's take a look at the S&P 500, Nasdaq, and Apple. Well, Apple had negative kind of movement on it yesterday. We saw that closed down 6.73 after having a very nice initial buy. I'll quickly just briefly say one thing. Firstly, we've got the 50 EMA down here. But on top of that, we also have a bullish pin bar or bullish hammer. Now, I've mentioned this many times. If we crack and we go underneath this potential bullish hammer here and we close below there, that's a very bearish sign. And in fact, it would open up $100 back up for Apple where previous resistance structure exists, and that would become support. There'd be a lot of buying there, I'm sure, due to the round psychological number and the previous, of course, resistance structure. But that's what happens when you get past a pin bar. the positive momentum in here actually acts as a very negative connotation. So always be wary and look at those kind of things. What about the S&P 500? Well, you might be saying, Tom, this is an ugly looking chart you've got on the screen right now. Yes, it is, but it does show monthly pivots. So when we're not exactly sure where markets might come down to, it's good to see monthly pivots. And that goes for the upside as well. So we've got the S1, which was reached and bounced off. We're now testing the 50 EMA here on the daily, which is really important. And then we've got this monthly S2, and that's sitting right at 3,200. So right at a key psychological level and a key point where we had previous weekly resistance. So the 3,200 really is, I think, a fortress here for the S&P 500. We're coming in on the 3,300 zone. This is exactly where we expected it to come to. This 50 EMA on the daily was certainly expected. And then on top of that, we also have, of course, some structure through this zone. And we've got the 3,300 right underneath it, which is that 100 level. And that's always going to be a key psychological level for something like the S&P 500. If we remove this particular indicator, and we take a look at what's going on right now, we can see here clearly, and this is why it's good to have naked charts, that there is some form of structure around the 3,300. Previous resistance just before it, then we broke through. This will make sense as being a key level. Another thing that we can do is we can add things like fib retracements. So if we look at the fib of the whole move, and we can say, well, does that line up with anything there? Well, you'll hear me before saying that 3,200 could have been a key zone. Now, the whole move here, we've got a fib really sitting more around the 3,250 level where there is some structure. So I think you're probably drawing a zone between the 3,300 and the 3,200, and you're looking at the smaller time frames in terms of the 4 hour, 1 hour, maybe even down to 15 minutes for signs of bullish momentum if you're long on this market. I do think there is going to be a lot of buying pressure coming in at these zones though. If we move the fib, however, to the last move, it becomes a little bit clearer that we've got a decent level here at the 3,200 in terms of a 61.8 fib pullback off the last move. We can see the 38.2 pulled up, the 50 fibs at 32.74 here, and then of course the big 61.8 fib that a lot of people call the golden one or the best one is sitting at 3,200. So it does make sense that this could be the level that's timing up with so many things. Remember, 3,300, 3,200, that 100-point range is going to be a lot of buying pressure due to a lot of technicals in that area. And we've just reached the first bit, which is the 50 EMA on the daily. So what about the Nasdaq? What's going on there? Well, the Nasdaq's hit that 50 EMA on the daily. We can see that it's found some support there. It's buying off after the market, so the futures are buying off. We did see the sell in to the end of the day and further selling after market close, which means the bigger players are in the market right now. We've got key structure around this 11,000 area, so it makes sense for this to be the buying zone for a lot of dip buyers or people looking at the pullback. Why? Previous resistance will become support. Over here, we've got the resistance. Here, we've got the support. And if it gets through this level, I think we just straight away open up 10.5 and 10,000. Now, obviously, 10.5 and 10,000, they're very easy numbers to use because they're 500 round numbers, but the Nasdaq likes trading towards these key levels. 10,000 would be super buying because, of course, it's very similar to where the previous highs were, being 9.7, and we've got that structure that formed around the 10,000. And potentially even a 200 on the daily by the time it gets down there, maybe reaching it in terms of that point. So we have the 10,000 and the 10.5 remaining strong levels, and this is really what we're probably looking at. We want to look at something like a weekly as well. The 10.5 is the weekly 20. So again, the 10.5 number makes it even more likely that this is a good level. We see that the 20 has been respected several times in bullish aggressive trends as the main sell-off characteristic during those bullish aggressive trends. So I would say that this is probably the level. If we break under here, 10.5, and then we should see a huge amount of buying support from Wall Street and from general dip buyers out there. So if you enjoyed this video, please remember to subscribe and of course like the video. Quick shout out to the rest of the trading community. It's been awesome support recently. We are well on our way to 20,000. Just remember, we're giving away $500 to a lucky subscriber just for being a subscriber, and we'll do the draw during one of our live streams, and then of course we'll message you on YouTube. So at this stage, it looks like the market is in a corrective phase. It makes sense. This is healthy for markets to do. It just does not seem like it when it's happening. Good luck everybody out there, and I wish you all the best. Bye for now.